overall, what's your take on liquidity in the market today, and what will be the likely impact on yields as we move into today's trading session?
So for the session yesterday, it was expected. We had about 1 trillion on offer throughout the day. So what we expected was that yields would go up in the secondary market. However, because there's still left system liquidity in the system, we didn't see that major impact in the market. What we just saw was a bit of yield movement upwards on the short end of the curve. But however, the OMO on the longer end of the curve remains stable because people expected supply to come out at 14.5 levels. However, with system liquidity still above 300 billion, what we expect is that there will be a bit of demand on that side of the curve because there's still a very attractive rate at 14.5. So we still expect people to take interest in that maturity. So because of system liquidity, which T-bills market is mostly responsive to, we would see a bit of demand pressures on that side, especially if there's no OMO auction today or opening next week.
I was just going to get into that. Given how large the last OMO auction was yesterday, can we anticipate another auction today, considering that liquidity is still relatively high?
Currently, we don't expect another OMO auction because another OMO auction would send signals to the market that rates should go higher. Maybe we'll now see CBN goes about 15%, but we don't expect that today. We expect system liquidity to remain constant. Maybe next week they'll do another OMO auction again, but for now, if they want to remain at 40.5 levels, we expect CBN to just hold off on the OMO auction for now and leave system liquidity. Because for next week, there's going to be an FX auction, so that should take care of system liquidity. Yes, exactly.
All right, okay, fair point about the FX auction. But is more liquidity coming next week? Of course, the disbursement of the monthly FAC allocations was responsible to a large extent for the spike in liquidity this week. So is there anything else coming next week that we should be aware of?
So there's a T-bills maturity again next week. That is about 300 to 400 billion. So we expect that to also play out. We expect CBN to conduct another OMO auction next week if they maintain their rates at 14.5 levels. So that will also be okay. So if they continue to maintain their mop-up of maturing obligations and maintaining their supply, so we expect market to be relatively stable around these levels.
All right. Okay, let's move on to the forex markets. What are the dynamics that you're expecting to play out moving into next week? As we continue to mention on the show, we are moving more and more into the peak of the electioneering season in Nigeria, and that obviously has some impact on sentiment of foreign investors for Nigerian fixed income and equity securities. What do you think is likely to happen with the exchange rate, given those dynamics with the elections?
So we understand that CBN is trying to protect the exchange rate at any cost of the interest rate. So in that aspect, we expect they'll continue to defend the naira. We can see reserves dropping a bit, but we expect that going forward, CBN will take measures on the interest rate side to protect this FX rate. So we should continue to see their CBN rates around 306 levels. You might see the INE depreciate a bit, but we don't expect a significant shift. But apart from that, we expect the CBN to continue to defend the naira at all costs, especially as the elections are coming. It's a part of their agenda that they're using to politic in that sense. So we don't expect any major moves. Any major moves on the FX side will be done after the elections, where we see new people coming to take into power or a new CBN governor in that sense. But I expect the stance that's been done throughout the year will continue to play a part till the end of the year and opening next year.
All right. And typically, do we see foreign investor interest on the longer end of the curve? And there, in that respect, I'm referring to the bond market. I'm hearing that the bond market is relatively quiet these days, especially relative to the T-bill market. But do foreign investors participate on the longer end of the curve at all?
Because of expectations of increasing rates, we're not seeing that much activity on the bond side. We're seeing a lot of people trying to play the waiting game to take advantage of higher yields or maybe 16% levels. But until we get there, we might not see much activity. So what we expect is a bit of bargain hunting by investors. If it gets to 15.6, 15.7 levels, so people can come up to buy a bit of bonds at those levels, but not much activity is going on.